All right, well, we're glad to have you here today for the lunch and for our guest panel of speakers on public finance. We also are delighted to have this moderated by one of our executive partners, Mr. Bob McNew. And I want to just tell you a little bit about him before he introduces our panel of speakers. Bob McNew is formerly the Managing Director and Co-Head of Global Capital Markets Group of Bank of America. He was responsible for debt securities, foreign exchange, derivatives, futures, and public finance activities worldwide. He has experience in trading, structuring, and managing business deals in financial markets. He has government experience advising the U.S. Treasury, the New York Federal Reserve Bank, and the European Central Bank on debt management, foreign exchange policy, and regulatory matters. And he is the former chairman of the Bond Market Association, president of the Dealer Bank Association, chair of the executive partners here at the Mason School, and we're delighted for his volunteer work and thank him for that. And his academic credentials include a bachelor's degree from Dickinson College and an MBA from Amos Tuck School at Dartmouth. So please welcome our moderator, Mr. Bob McNew.
You are all so far away and munching, but whatever. As was indicated, I got my MBA, but I'll tell you many years ago, and shared something in common with I think most of you, and I think pretty much all of our guest panelists. As I was coming out of business school, bright, shiny, kind of thinking I knew everything, I got a job with a large bank in Chicago. In the bond department. And I was assigned, after a little rotation, to the Municipal Securities division to help out underwriting municipal bonds, a part of the public finance business of the bank. I knew absolutely nothing about those securities, about those markets, about the functions that were involved in the bringing of debt securities to the market for states, cities, and authorities. But I learned very quickly that it was an incredible market to learn in. It offered an incredible variety of different sorts of credits and structures, and all of which needed to be priced and to be managed at risk. So it was a tremendous learning experience for me. I think what we hope to do today is to give you some basic understanding of what this functional market, public finance, entails, and to give you some idea of what a career in one or the other aspects of this function entails. I only got involved in this presentation yesterday afternoon, but when I received the bios of our panelists, I was really thrilled. We have with us representatives of different institutions and functions that put together give you a good view of the entire transaction chain that occurs in bringing municipal securities to market, or put another way, financing states and municipalities in this country. I could go through and read all of this. I'm just going to give you, that is their bios. I'm just going to give you a brief idea, and then I'm going to ask each of them to give you a little bit about their background and how they discovered public finance and their particular functions. First, we have Kirsten Krug, who is a director at the Municipal Securities Division at Citigroup. Graduated from University of Pennsylvania, I assume, Wharton, is that right? Yeah. Wharton, with a BS in economics, concentrating in finance. She is responsible for the coverage of Commonwealths of Virginia, Kentucky, and Pennsylvania for the Municipal Securities Division. We have Hannah Mayhew, who is a senior analyst with the PFM Group. PFM is an advisory consulting service that's offered to government officers in states and municipalities in terms of structuring and carrying on the issuance of securities. She graduated from the University of Virginia with a BA in economics and philosophy. Interesting. Then we have Megan Martz Gilliland, who's a partner in the firm of Kirsten and Barton. Bond counsel, a firm that, a practice within the firm that advises states and municipalities in financing transactions, the issuance of securities, and other governance issues. She's a graduate of William & Mary with a BA in economics and English, law school at the Richmond School of Law, University of Richmond School of Law, and a Master of Laws in Taxation from Georgetown University Law Center. And then last but not least, in fact, probably the most important person, all these ladies pay homage to this lady, Suzanne Mellen, who's the Assistant Director for Financial and Management Services, James City County, has been with the county for 27 years and is responsible for budgeting and for the preparation of financial statements. As a citizen, we appreciate the AAA rating. You should also know that James City County earned a distinguished award from the GFOA, the Government Finance Officers Association, for excellence in what they do. What I'm going to do is ask each of these ladies to give you a little bit of their background and how they got into this amazing business. And then we'll get into talking a little bit about how issuance and these markets work. So where should we start?
Oh, I'm happy to start.
Go.
Can y'all hear me? Yes. Okay. My name is Megan Gilliland. I'm an attorney. I work at a law firm in Richmond, Virginia called Kirsten & Barton. We're about 40 attorney firm. And one of the sectors that we work in is public finance and general government representation. Like many public finance men and women, I think we all fell into this career. I don't think we knew a lot about it when we were in school, and in reflecting, I wish I'd known more about it because I think it's a neat area to work in. I went straight through college to law school to my post-law degree, and I always felt like I was very pigeoned. My programs wanted me to go into like a large firm doing a very specific small area, and I wanted to have a broader practice and see different things other than just what I felt like I was seeing, like maybe only traditional corporate finance. And so when I saw the job posting for Kirsten & Barton when I was graduating from school, I was really interested because it spoke about doing corporate tax and securities work. I knew about corporate, I knew about tax, I knew nothing about securities work, but I was willing to give it a try. And the last 8 years I've spent, and that's really what I have focused on the most, is securities work in the public finance area. I love working on the deals. They're really interesting. There are a lot of different lawyers that are involved in the transactions. There are a lot of different bankers and underwriters that are involved, the financial advisors that are involved, and you'll hear a little bit about more what they do in a minute. And working with state and local government entities and learning how they work. It is not like working with the private company, but there are some similarities. There are also some differences, and it's just they're fun people to work with, and I would not have 8 years ago thought that this was where I would be now, but I'm so excited that that's where my career has taken me, and just want to make sure that others know about it.
Well, my name is Hannah Mayhew, and I am in the financial advisory side of the business. So we work directly with the states and local governments and help them throughout their financing processes. And I stumbled upon the industry as well, and didn't exactly know going into it what it was, public finance. And I knew that I liked math and finance, but I also really enjoyed client-to-client relationships and being able to do a lot of different types of projects. And I think the financial advisory role really helps fit for me because you get a chance to directly talk and converse with clients right away and get a chance not only to be a part of their budgetary systems and budgetary processes, but also help them with their bond financings and other types of capital projects.
Hi, my name is Kirsten Krug, and I'm a director with Citigroup. Like the other ladies here, I kind of fell into this industry. I've been with Citigroup for 16 years, and this has been the only job that I've ever had. I went to the University of Pennsylvania for my undergrad and knew I wanted to do finance. I kind of had my heart set on working on a trading floor. That was my summer internship prior to my senior year. And when I saw the job posting for this, I thought, well, what the heck is public finance? And I was pleasantly surprised. There were a couple things that in particular really drew my attention. One was it tends to be smaller deal teams. I like the idea of investment banking, but I didn't want to work in corporate finance where I would just be doing pitch books and proposals all day and not really get any of the kind of client interaction that Hannah was referring to. So I like the fact that it was smaller deal teams. In a lot of ways, it's a lot more complex than corporate finance. State and local governments face a lot of different challenges in a lot of different areas, and I thought public finance was a good way to really get creative, come up with interesting financing structures. And then, as Hannah also mentioned, there's kind of a public policy aspect, and I think deep down all of us are public policy junkies, and a career in public finance kind of gives you that good balance. So again, never did I think I would probably still be here. I think my job has changed a lot since I started as an analyst, running a lot of numbers, doing a lot of analytical work, and now I'm responsible for new business in the states that I cover. So even though I have been at the same job, it has changed a lot over the years. But again, like the other women, I'm very happy that I found this job.
And I'm Sue Mellen, the Assistant Director of Finance for James City County. I'm originally from Buffalo, New York, and started out my career with Citicorp. It was way back when. And then we moved to this area and never thought that I would get into government finance. But that was the job that I applied for. And because, again, I started out in accounting, they move you through a CPA track, and I always knew that was not what I wanted to do, that I wanted to either work for a company or something a little bit smaller scale. But the one thing that is, I would say, a little bit different about my job than the ladies next to me is I refer to them as my subject area experts. If I need something, I'm going to go to my financial advisor, I'm going to go to the bond lawyer. My job is very broad. I look at government finance as really being a bridge. It's a bridge between a lot of things. It's a bridge between departments, your school division. They all have needs, and we need to help them figure out how we can get those needs accomplished, and that requires paying for them in a different way, in various different ways, raising revenues, borrowing money, those sort of things. And then it's the bridge to be able to communicate numbers in a story to people so that way they can understand it. A lot of times, we always joke that the budget document or the financial statement, how many people actually go ahead and read them, except for the rating agencies and the bond lawyers and everybody else. But an average citizen is not going to pick up our financial statement and really understand what is going on. So it's our job when we're out in the public to try to make sure that we translate those numbers into what is meaningful to the citizens of the county.
So let's go through a transaction. Suppose Suzanne, after you've put together the budgeting priorities for the next fiscal year, there's some extraordinary capital requirements that would cause you to need to raise some relatively long-term money to fund a couple of new schools or a police station or something like that. What would you do? How would you start that process? Who's on your speed dial?
So once the budget is adopted, that we're going to go ahead and in our capital planning, we'll take the police station as an example, or either or the schools.
There's a brand new one, isn't there?
We've done both two
one
new
out by
schools
Barton?
very
Yeah,
recently,
yeah.
and then the new law enforcement center that we did within the last couple of years. Actually, the first thing that, to back up a little bit, counties in the state of Virginia do not have automatic borrowing authority. We have to go to the voters to either get a general obligation bond approval, or we have to look at different financing methods to do that. We just can't, where cities can go ahead and do general obligation bonds without a problem. So if we don't have a referendum, the first person that I'm going to call is our financial advisor, and to talk through the different options on borrowing, whether we're going to borrow from a bank, we're going to do a direct one, or if we're going to go out in the market. We also have different avenues available to us. If it's a school, the Virginia Public School Authority will do group bonds. The Virginia Resource Authority will do bonds for us. So we'll call the financial advisor first to talk through the different options that are out there and what the markets look like, to see maybe what is going to be the most cost-effective way for us to move forward.
And then
once we do that, usually our financial advisor will contact the bond lawyers to let them know, okay, we're going to have a deal coming on. They tend to not come into a lot of play once we start working through the financial data. As you said, we're AAA rated by 2 of the 3 rating agencies. We still have not broken through the Moody's crack yet. But what we'll start doing is we'll start preparing documents. We will do rating agency presentations to tell the story, to go through our financials. We'll start working on a preliminary offering statement with the financial advisor, working with them.
So Hannah, you will help with all of that.
Correct. All of these different steps, I think. It depends, entity by entity, but usually we're involved in all these different parts of the process and help coordinate the rest of the financing team and keep all the pieces moving forward and run the numbers and see how much borrowing needs to happen, and based off of the revenue streams behind that, behind the new projects, as well as the other types of needs and the type of locality, figure out the best way to go forward with the process.
So you'll come up with kind of the plan of how to get this cash, how to address the market, in what form, when, et cetera.
Exactly, yep. And it's usually about, correct me if I'm wrong, a 3 to 4 month process maybe, from beginning to end. From when we sort of step in. I'm sure it's year long for...
We just actually went through a refinancing. We refinanced some of our debt, and I think
Get some of that cheap money? Is that the idea?
Yes, we actually, and it was really with our financial advisor, really timed. We were very fortunate, timed the market really well. There was a string of maybe 2 or 3 days where it bottomed out this summer, and we timed it perfectly. We had like 9 bids on our refinancing, and we're able to attain really low interest rates and save about $500,000 a year over the remaining life of the bond. But I think that was like a 2-month turnaround, so it was really very tight. On a refinancing, once you decide that you're going to go ahead and do it, you really want to go ahead, because if you really play the market. This time we did very well, but a lot of times you don't want to wait too long if the rates are really good.
Citi, I assume, was one of the bidders in this?
I don't remember all of them.
Well,
8 or 9. We had 2 deals. We had a general obligation refinancing.
And these were competitive bids, right?
They were competitive, and then also a lease revenue, and that is a different financing mechanism to be able to borrow money without getting the voter approval. It tends to be slightly more expensive, but because we have such high ratings, people like us in the market. They bid on us. They know that we're a good credit, and we get a lot of.
So, Kirsten, how would you approach a bid like that?
Well, competitive bids, usually our competitive underwriting desk has a sense from all of our salespeople what investors are demanding, what type of paper they're looking for, and at what yields they're looking for. So our salespeople are constantly in touch with all different types of investors, from large institutions down to your mom and pop retail investor, and really anything in between. So when a bid comes up, usually we have about a week or so to drum up that interest from investors, so we can put in the most aggressive bid possible on any sort of transaction. And then on the day of pricing, whoever is the most aggressive bid is going to win. That's for competitive sale. There's also negotiated transactions, which we tend to do for more complex issuers. And in those, we're part of the deal team with the financial advisor, with the lawyers, with the issuer, and we're working together to develop the offering documents. And really for that, the marketing process tends to be a lot longer, particularly if it's a new credit, a new security package. It's really an educational process. And there are various different ways that we'll communicate with investors. We do anything from internet roadshows to in-person roadshows where we're traveling across the country, meeting with investors one-on-one. Sometimes it's just phone calls. It really varies. And then we have obviously our own set of marketing information that we put together and distribute to investors. So it really is just an educational process. And we get questions nonstop and during that week before pricing, just trying to really tell the best story possible for a credit.
And then underlying all of this is the legal work, the documentation, the form of the security, making sure that in fact the authority or the county or whoever's issuing the security can legally do that
Right.
in the form. Why don't you tell us a little bit about that?
So while the process is going on where the issuer and the financial advisors are working on structuring the deal, getting the underwriters involved, they also are usually getting their bond lawyers involved. The bond lawyer serves as the lawyer for the transaction, making sure that all of the pieces of the puzzle, so that when you get to the day that the bonds are being issued, the deal closes, that everything has been done legally so that the bonds are valid. And that would involve, from a due diligence standpoint, whether there are any tax issues. State and local governments can issue tax-exempt debt, and in order to be able to issue these bonds for the investors on tax-exempt, you have to make sure you're following all the IRS rules and regulations about that. So a lot of time is spent up front when the structure is happening as far as whether or not this deal is eligible to be done on a tax-exempt basis or on some other taxable basis. So that's one piece of the puzzle. Another piece of the puzzle that's really important is what rules the issuer has to go through for purposes of issuing debt under state law, as well as any local city or local ordinances that might be in place. The state rules would require, if there are any public hearings or public notices that need to be done, to let the community know that the county is planning on issuing debt, or another, like a city or a town. The board would need to take action on what the parameters of the financing are going to be, how much money they're being authorized to borrow, what the terms are going to be for the financing. So that's a separate piece. And then just the deal drafting the offering documents, which is the part of the puzzle that tells the story to the market and what the credit looks like. And that would also entail all of the terms of the bonds and letting the market know what the security structure is, and also what the tax rules and regulations are that are associated with those bonds. And then there are the underlying bond documents, which would be the documents that serve as the creating the duly validly authorized bonds. There is a trust indenture in many cases. That another part of the puzzle that we have not talked about is in a public financing, there would oftentimes is a trustee involved, where they would serve almost as the representative for the bondholders in making sure that the bonds, as they're being sold on the market, or refunded, or different things are going on, that the bondholders the contractual obligations are being followed for purposes of maintaining the bonds and their status. So the document drafting is a big part of what the lawyers do, but we're involved in all the other pieces to make sure that the legal steps are being followed throughout, so that when you get to closing, all of the federal, state, and local rules and regulations have been followed.
Most obligations of states and municipalities are tax exempt.
I mean,
Right?
yes,
Yeah,
more often
and
than not.
therefore, most of them end up one way or another being owned by individuals. Is that right? One way or another, through
Yeah.
funds or
Yeah.
Yeah.
whatever. What happens? Now I know this is probably a pipe dream, but what happens if we have tax reform, and all of a sudden, say the top income tax rate in this country drops?
I don't know if I want to talk about that today.
Well, I bring that up because it's one factor that peculiarly affects the securities of states and municipalities, and it's something that we've been living on the cusp of for many years, and maybe for many more. But what do you all think about that?
No, it has been a common topic for probably the last 2 or 3 years, and it's constantly changing. So, they talk about taking it away altogether, or taking it away for higher income individuals. And I'll be honest, and I don't know that I've felt like it's gotten to the point where it's close to a reality to consider what the true implications would be. I do know that, in particular for the Commonwealth, the state treasurer of the Commonwealth of Virginia has taken a very active role through a national organization of state treasurers, and they have really worked hard to communicate what the financial ramifications would be for, say, the state of Virginia and other states if there was to be reform to the tax-exempt market.
Yeah, I can tell you that, this issue has been around, for the last, I remember arguing about this 35 years ago. This is nothing new. What, another thing that's kind of, well, let me give a little bit of background. Generally speaking, the credit of the states and municipalities in this country is quite good relative to other sorts of obligors. There are very, very few bankruptcies, municipal bankruptcies. There are very, very few defaults relative to other types of securities. But there are a couple of big bankruptcies going on now in your market. What effect has that had? I'm thinking of Detroit, for instance, a couple of California, Vallejo, et cetera. Has there been a particular effect of that on your markets?
Well, I think I can answer that one. Yes and no. Obviously you had the Jefferson County issue that, for the most part, happened last year. Detroit, which is ongoing. It hasn't had a huge widespread effect on our market, so on transactions that we've been doing in the Commonwealth of Virginia haven't been impacted, just because the Commonwealth tends to, the state itself is so solidly rated, as are many of the local governments in Virginia. But we did see at the time that a lot of the Detroit news was happening, that other issuers in the state of Michigan were having more challenges when they were bringing their bonds to market, and probably paid a higher price for their bonds because of that kind of cloud surrounding the Detroit situation. It'll be interesting what happens with Puerto Rico. They're really struggling right now, and the interesting thing about Puerto Rico is that it's triple tax exempt, meaning it's exempt from federal, state, and local taxes by everyone. Usually just municipal bonds are tax exempt within the particular state, but Puerto Rico bonds are triple tax exempt for everyone, making them really highly desirable. And because of that, a lot of the institutional investors hold Puerto Rico paper in their portfolios. So should Puerto Rico continue with the fiscal challenges that they're having, that could have a more widespread effect on the market.
Although that fear has been going on for 35 years too. So
Yeah.
All of, as you're probably learning, I hope, one of the things that makes these markets interesting is that they take place in a heavily political environment. Not only national politics, but state and local politics as well. As I told you, my initial experience was in Chicago, back when Mayor Daley, this is the real Mayor Daley, was running things. And there was a lot of politics going on then of interesting types. I wonder how the political environment in the state of Virginia, in various municipalities affects what you do. It must affect your ability to plan.
It does, because we don't have a debt limit. We can, I guess, borrow as much as we'd want to. However, we're in charge of financially managing the county. So there's, we like to try to, when it comes to capital projects, it's been our practice in the past to be able to do large capital maintenance projects on what we call a pay-go basis, where we pay it out of the recurring revenues from local taxes. And the bond rating agencies actually like that, when you're able to finance a lot of your larger capital projects on an ongoing basis. And when I say that, I'm talking about, big school refurbishments. Nowadays, you'd be amazed at how much HVAC replacements cost for big buildings. It's just crazy. But those types of things we try to do on an ongoing basis. And then for the larger projects, new school or what have you, that's when we go to borrow. However, and I think it was 2006, 2007 was when we built the two new schools, Hornsby Middle School and Blayton Elementary, up in the upper ends of the county. And that was $100 million between the two schools right off the back. And it really and that was right before all of the financial troubles. So when we had gone and done projections and presentations to the rating agencies, we anticipated we have some fiscal policies where we want to make sure that our debt service doesn't go above a certain percentage of our ongoing revenues. So that way, most of the ongoing revenues aren't going to debt service, they're going to regular operations. And so we were like, well, we'll be out of our fiscal policy range maybe for a year or two because it was such a big bump, but we have a plan for that. Well, we did have a plan, but then our revenues started dropping, which really had an impact. So in the political environment, a lot of times there will be discussions as to how much debt is too much debt. And we try to set up policies so that way it's in a reasonable range from a financial perspective, but politics come into play a lot. And so then there'll be discussions as to whether you actually borrow for something or you really can afford it.
Any other comments on that? If not, I'm going to open it to questions. Do any of you have questions of our panelists on their careers, how they got involved in public finance? In fact, how the public finance markets and functions work?
Yes, I do. My name is Billy Harper. I'm a secretary. Sorry, please use the microphone. Okay. Hello? Billy Harper, and I'm a second year at William & Mary, and this sort of goes back to the question about the $100 million that you all borrowed, and this, I guess, could be answered by a couple people, but in terms of that, was that all bonds, or was that a blend of commercial debt? Did you borrow commercially as well? And in going on with that, how in terms of commercially, do you all compete with commercial loans and stuff like that on the bond side, or is it pretty cut and dry when a city is borrowing money or a municipality is borrowing money? Hey, we're going to fund this all with bonds, or are we also going to do it with commercial money? Does that make sense?
The $100 million was all bonds. They were lease revenue bonds, both schools, and the schools, because they were considered essential functions, were the collateral for those bonds. So we did not look at commercial pay. From my viewpoint, it's pretty cut and dry. It has always been less expensive for the county to borrow in the markets.
Because of our credit and because of the tax exemption, right?
Right.
Yeah.
And I think probably some of your smaller projects are usually financed with maybe a bank loan, but once you get into any sort of size, like $100 million, it would probably be more efficient to borrow from the capital markets.
We really haven't talked about other sorts of transactions besides kind of large capital needs. There's also the treasury function, just managing the cash of the county. Perhaps, Kristen, you want to talk a little bit about the services that a bank offers in cash management and investment and things like that.
Would you want to start?
In Virginia, there are locally elected treasurers who do have their primary responsibility is to manage the cash of the county, and I can say that James City County utilizes PFM as there in helping with the investment side of the cash flow, because we do have a fairly stable cash flow. Taxes are billed out twice a year, and then the treasurer works with PFM to invest the money that's not being used at various given points in time. So,
and how does that kind of work? Does it all go into a pool of some sort?
Yes, that's
PFM or?
correct.
Yeah.
PFM on the investment advisory side, which I'm in the financial advisory side, so we are separate but part of the same organization. But they have Virginia SNAP, I believe, is what generally all of the investments go into that pool, which is state level pool, and that's where the investments take place. I know that also with cash management, what we help with on the financial advisory side is helping to figure out, for instance, we're helping a county in northern Virginia, figure out the correct tax rate so that the cash flows match what their needs are throughout the next 20, 30 years to make sure they understand when they have to borrow and whether or not they have to borrow at all. So that, from a cash management perspective, we do help with that.
Other questions?
Hi, I'm Flav Rogers. I'm a first-year MBA student. My question was in regard to the frequency with which local governments and states go to the bond market, and has that increased recently with the favorable interest rates?
We go out, it really is dependent on our capital planning, what we would need to go out in the market for if we have big capital projects that need to be financed. So that tends to not necessarily be very regular. During expansion time, we were building schools pretty frequently, and so we would go out quite a bit. Now what we see is opportunities really for refinancings. And so the last couple of years we've done them in the summertime. I think we did one this past summer, and then it was 2 summers ago. So, and based on when call dates are coming up, we might have the opportunity again next year. So.
And that, what Suzanne just mentioned, that's pretty typical for what we've been seeing across the country. The last 2 years, supply has been a lot lower than it has previously. I think a lot of state and local governments are just, taking a look at their financing, seeing where they can cut back because, fiscally things are pretty tight generally around the country. And actually the last 2 years we've experienced negative net supply in our market, which basically means that once you take into account, refundings, you're just refinancing bonds that are already out there. If you also take into account bonds that mature, bonds that are called, all those things, you actually are in a state of negative supply. So that's part of the reason why rates have been so attractive for municipal issuers, because investors, every time you refund a bond, if they already hold that bond, they're not really adding to their portfolio. you're just replacing it with another bond that has a lower coupon on it. So we've actually seen negative net supply, but as things expand, we do assume that, you know, state and local governments will start borrowing more as they feel more confident in their own finances and are able to support more debt.
Questions?
Yeah, so my name's Kenny Herring. I'm a first-year student. I've got a two-part question, actually. So from the government side, what kind of checks and balances do you all have in place from like an auditing standpoint to make sure that you're not borrowing too much money or you're not exceeding your limit ethically to make sure that everything's in play and to make sure that your analysts and the banks and lawyers and everything are doing their part to make sure that you're straight? The second part would be what frequency do you have to bring information to, let's say, the board of directors or the board of supervisors for the county, and how easily or how difficult is it to present cases and information to them in various steps when they may not be too adept as to what you're presenting, or they may not have a full financial background like you all have?
Can you repeat the first part of the question
good
again?
question.
I'm sorry, I was listening to the second part. I lost the first part. Get it go.
What type of auditing standards
Okay.
are in place to make sure that you guys are not exceeding? Obviously, you said you don't have a debt limit.
Right.
What type of practices are in place to make sure that you're ethically borrowing, internal controls?
Okay.
To make sure that you're doing the stuff that you're supposed to do to make sure that the county's taken care of.
And this is one of the roles that our financial advisor has played over time in setting up a series of fiscal policies of where, like I said, we want to be between 8 and 12. Our fund balance, our available fund balance that really isn't restricted for any reason is 8 to 12% of our overall ongoing revenues, you know, in a given year. So we watch that to make sure that we're within that range. And additionally, the other really stringent policy that we watch is the 12%, that we don't exceed 12% of operating revenues in a given year as to what the debt service is. Another one is, I think it's 3% of our assessed valuation. Okay, so that's a driver of how much taxes we'll be able to collect on an ongoing basis. So overall, we really, the county has done very well at managing those. We're well within all of them except that one with the revenues, where because we started seeing some declining revenues and we had bumped up right before we dropped that we're still hovering around that 12%. We're under it, but we make sure that we don't go over. We also fairly regularly, we always give them an update when we're going through the budget process. We go through the budgeting for the debt service fund and also for capital projects, so they are aware of different things, and we tend to we'll look 5 years out to make sure that our cash flows are going to be okay, that we're able to meet debt payments going out. So there's a lot going on, and I think because it's overall a conservative approach to finance, the AAA rated bond rating for the county has been very important to our Board of Supervisors. And so with our financial advisors, we talk to them about what rating agencies look at to make sure that you retain that you don't want to be, one of the things that they don't want you to see is that you're dipping into your reserves, this fund balance, and you know, you're always running a deficit. You have to have a balanced budget every year. So all those things come into play.
Let me kind of take the second part of your question and reframe it a little bit. The municipal market on both sides, the issuing side, as you alluded to, is made up of many small towns, school boards, fire districts, all sorts of governmental entities, where the sophistication of the people who are responsible for the financial management may not be what as professional as you would hope. On the other side, municipal securities, because they are tax exempt, ultimately end up in the hands of individuals. Some, I would say, most of whom are not super sophisticated in a very technical market. Hence, the marketplace is heavily regulated, and I wonder if you could tell us a little bit about the regulation that exists. MSRB, things like that.
The bad word.
MCDC.
Yes. Right now, there is the Securities and there is an initiative that is underway. It's referred to as MCDC, Mandatory Continuing Disclosure Compliance Initiative. When an issuer, a state or local issuer, goes out into the public market and borrows to issue debt, to borrow money, they make contractual obligations when they sell those bonds to provide the market on a regular basis information, their CAFR, their financial statements, certain operating data that would be pertinent to the particular financing and revenue structure. The issuers themselves are not regulated by the SEC, but the underwriters that sell those bonds are regulated. So there's a contractual obligation that's entered into when the bonds are issued that the issuer promises to provide this information to the market. And it's relevant for purposes of secondary trading of the bonds. And the promise has been made that they're going to be providing this information to the market during the life of the bonds. There is an initiative right now that the SEC underwent. There is a deadline on Tuesday for the first step in the process where issuers and underwriters have been asked to go back and make sure that they have been properly disclosing the information to the market that they had promised. And in situations where you have a repeat borrower, a borrower that goes out on a regular basis over it's a 5-year look back, that they have been telling the market that they have or haven't been meeting their contractual obligations to provide this information. And the SEC has really honed in on asking underwriters and issuers indirectly to make sure that they are putting the information out in a timely and complete fashion. And so the first deadline that's coming up this week is for the underwriters to, they've been given the opportunity to disclose to the SEC any situations where there hasn't been compliance. And then issuers are being offered the opportunity to also self-report. I think that deadline is in December 1. Mm-hmm. So there is an increased regulatory presence. And it's over the last several years, I've seen it in my practice, it's increased significantly. The IRS, there's the federal security piece of it where there is increased regulation. And then also on the federal tax side, there are regulations as well. There hasn't been a huge initiative as of late that is equivalent to the SEC initiative, but the tax regulatory requirements are numerous and very technical, and it takes years to learn them and years to keep up with them, for lack of a better word.
And then broker-dealers are heavily regulated.
Yes. I'll let Kirsten speak to that.
You are registered.
Yes.
There is a thing called, I think it's, if memory serves, G37?
There's many of them, yes.
Yeah. I believe that political contributions are still heavily, essentially forbidden. But
yes.
Yeah. There are all sorts of safeguards that are kind of built into this market that have been developed. I guess MSRB, Municipal Securities Rulemaking Board, came about in 1973 or 4 in there somewhere, and because I think quite rightly so, there needs to be supervision about what's kind of how this market works. Other questions?
I have a question. For each of your roles, what are your greatest challenges, and for the field, what do you think are the greatest career opportunities?
I guess I'll start. I think that the greatest challenge upcoming for I'll just say local governments from my perspective, is that it's a changing environment. It is always a challenge. Budgets are always a challenge. As a matter of fact, I was talking with somebody the other day, and they had said, the easiest budget that they ever had to do was when there was no money, because then nobody got anything, and there was no competing interests because there was really no money out there. But there are a lot of needs in the community, and it really requires a lot of creative thinking of doing things differently to try to stretch the dollar as far as you can go to meet those needs. But it's always a challenge to be able to communicate effectively to a lot of different stakeholders. I mean, there's, for every time you turn around, you can say one thing and somebody will be able to resonate with what you're saying. Yes, that's really important. And you'll have somebody else that's coming from the exact opposite mindset. So it's always a challenge, but I find it to be an interesting challenge. And hopefully we do not. And the other challenge is still the mindset that's out there is that things are going to get a lot better. We're going to go back to the way that it was. And it's been quite a while. We don't really expect that things are going to go back to the way it was, So there's a lot of factors out there that keep popping up. And
I think from my perspective, probably one of the biggest challenges is along the lines of what Megan said, another rule that's in place, it's called the Municipal Advisor Rule, and basically for an underwriter like myself to have contact with a client, we have to fill out all sorts of paperwork and certain exemptions have to apply, and overall I just feel like it somewhat hampers my ability to talk creatively with my clients about ideas that we might have. And I think ultimately it'll improve. I think it's just right now, since it's a pretty new rule, everyone's just trying to grasp it and make sure everything is followed and all the paperwork is done correctly. And hopefully as time progresses, it won't be as much of a challenge. It'll just be one of those additional forms that you have to fill out and kind of move on with your day-to-day.
I think the challenges in the FA industry really mirror all those different types of challenges because we have to keep tabs on the changes across the board and keep our clients up to date on what those changes are, how it impacts them, and also keeping an eye on a lot of developments in the rating agency field and how they're looked at and how they look at municipalities, how they rate them, how they calculate those, the AAA rating versus the AA1 and all the different types of ratings. And I think as it progresses and as, disclosure issues also become even more of a factor than they already are, making sure we are aware of all those different types of things that are going on.
Mine is similar to the regulatory changes. 5 years ago when I was practicing and you had a deal, the types of things that we were focusing on are very different than they are now. Those issues are still there and we're still focused, the ones from 5 years ago are still there, we're still focusing on those, but now we're also looking at all the increased regulatory items. And I think it makes a transaction, it makes it difficult because my clients, whether it's the issuers, the underwriters, are looking to their lawyers to help them have to make some really difficult decisions. And sometimes it's hard to make them quickly, and you're often working on a transaction that is very time sensitive, and you're trying to make some really hard decisions and help them make the best decision with the facts that are available in a very time sensitive situation. And so I have found that to be, it has become more of a challenge with the increased regulations that we're seeing in the last couple of years.
Other questions? Okay. Thank you very much. Let's thank our panelists.